Hey, what's up, guys? Nice to have you back on the channel. Sorry I've not been around for a while. I wasn't feeling so well, but I'm much better now, and I guess I'll be back on my feet again. So, I just want to give a quick recap of the pairs that I'm looking at trading forex wise this week, starting February 27th. So, the first pair I'm looking at is Euro USD. Now, if we go to the monthly chart on Euro USD, maybe I should use a chart. It's just that most of the charts already have them marked out, but nonetheless, I'm sure we'll still get the picture. Okay, so if we look at the monthly chart, we can see that actually on the monthly chart, it has been on a downward trend on the monthly level, and that this move upwards was actually more of a pullback. So that rally that we saw was more of a pullback, and at this level, when you draw the Fibonacci from the low to the high, at this level where the rally seems to have turned was actually the 50% level. It didn't get to the 61% level. You draw a Fibonacci. So now, since it's a monthly situation, it's still possible that even if you notice what happened was that what has happened so far right now is that it's after hitting the 50% level, rallied above it a little, turned down, and came back and has hit the 38% level. Because I have some other markings, you may not see it so clearly. Let me check the other one. Okay, it's clearer here. So you can see that in this one, drawing the Fibonacci, it rallied up, it hit the 50% level, and has come down now to hit the 38.2% level. So this is monthly. So this is the much bigger time frame looking at it. Now, of course, in monthly, we know that it's very possible that it can still turn up and go back to the 60%, 61% level before coming down. So that's a possibility. And this is at monthly. Right now, hit and is declining. And we can see that from the way it's declining presently, it has actually broken that 38.2 level considerably, right? We can't be so sure yet that it won't pull back, because what usually happens for Euro USD is it just moves from one level to the other, meaning that I will say that as I've broken the 38% level, if it declines below it to a certain level, we can start expecting it to come for the 23.6 level, you know. Although I don't see that happening this month, because this month is already almost over. So with that being said, it's very possible it can pull back to the 30 and turn around. We'll see that in March. So let's go to the weekly and look at it. So on the weekly, you can see how the decline has happened so far. We're just starting a new week. Then we go to the daily. So now this is where I want to bring our attention to, because I use several things to trade. But one of the key things I use to trade is analyzing using the Elliott wave principle. So I try to make it easy. Now, I am assuming from what I can see in this move on daily, this looks like an A, B, C move, meaning this was an impulse move. This was a corrective move. So a corrective move. This was an impulse move, because the A is usually impulsive, B corrective, and the C impulsive. What that just simply moves is that the A will move in 5 waves, the B will move in 3 waves, while the C will move in 5 waves again. So it's like we have impulse, corrective, impulse. So just looking at now, just observing the way this thing declined, it looks to me it was like an ABC. You get. So with that in mind, I assumed that this was going to be 5 waves. So when I went to the H1, I looked at it in that light. I tried to look at it in terms of a 5-wave move from the very top here. So when I observed it, what happened as it declined down, I noticed it was actually very similar to a 5-wave, which was the 1, 2, 3, 4, 5. You understand? Before we had this pullback, which makes sense, you know, that this pullback which makes sense, which will now be like the retest, making all of these like a 1 or an A, then we can now have the decline again for an ABC. So looking at it that way, it kind of makes sense. So meaning that this decline downward would also, if looking at it as a C, will also be an impulse move. So it's going to be 5 waves. So far I'm looking at it that this is like 1, 2. I'm looking at this move that we have here as all those correctives. So this is like 1, and all this is just like a corrective for like 2. And then this decline we're seeing currently is like for the wave 3. So with all those projections in mind, basically I can say that for the Euro USD, the decline target is not yet reached. From my calculations, the decline target should be somewhat around. Okay, I wrote it down somewhere. Let me just check. The first target we'll be looking at will be for a standard wave 3 should be around 1.0489. So from where it closed on Friday, we still have a little decline that we can expect, at least another 50 pips, 50-60 pips from where it is right now. You know, so that's that being said. Okay, so that sound there, I'm wondering why I'm having a sound. That should mean that maybe a pair is being triggered. Okay, the GU. Okay, GU just had a decline move. Okay, it's just hitting a support level on H4, I guess. Yeah, GU just turned around and pulled back down. So that's why you're hearing that alert. So let me just disable that. Okay, so back to the video. Okay, so the next pair I'm looking at is USD JPY. Now for USD JPY on the monthly chart, so because you see when you're analyzing, some people just look at the daily chart. It's good to go from the big picture to the smaller picture. Now I try to make it very simple. On the monthly chart for USD JPY, you can see we had a notable low, a rise, and a pullback, which hit the 50% level just like Euro USD, and has turned around and it went up to the 38, and right now seems to be proceeding to the 23 points. At least that should be the next expected level. Of course, we know this is trading, it can still not get there and just turn around back. But for now, it's rising towards that direction. So we can expect it that is where it's going. So with that in mind, you know, we can see that we may still have, so you can actually enter a simple trade-off using 38 as your stop loss and this level as your take profit. That could just be a simple trade, although that may take some time because of course this is a weekly chart, you know. So in the shorter term, you may want to look for situations where it declines, then you enter in for a buy. Now, the way I looked at it using the Elliott wave theory, I just looked at it very simple. I just took it that what we're having here is an impulse wave, so we should be able to count a 5-wave rise. I am thinking that this move here, this rise here down, is the wave 1. And this one here, see here, it's like a sub-wave 1, because you have waves inside waves. So using this as the first wave 1, it gave me a projected level, you know. Let me see where I wrote that down. give me a target level. The initial first target it gave me then, which I used to trade last week, was about this 135 level. Of course, it has beat it, you know. Of course, it also gave me an extended projection level, which was the 136.5, which it has also hit that. There's also an further extended level, which is the 37.50. Beyond that is the 39.50. So as it rises, you can just be using these levels I just called as projections, as targets, you know, until it gets there, you know, while minimizing your stop loss in relation to those levels, you know. Okay, so that being said, the last currency pair I'm looking at is the NZD USD. NZD USD. Okay, so this is the currency. Basically, I just observed something on it, so I'm kind of excited about it. I believe it's going to decline massively. You know, I just noticed this is, if you look at it, this is like an M pattern. It's like an M pattern. So on weekly, you see it a little bit clearer. It's like an M pattern. Of course, if you go to monthly time frame for this pair, you can see it was actually declining. It just pulled back to about the same 50% level, you know, and it has started crashing back. So we may expect it to go all the way down in the coming months, because it was actually declining. The move is actually declining. So it hit the 50% and it's crashed. Now, in a lower time frame on weekly and daily, we can see this a W pattern, meaning we can expect when you have this kind of break of the support of the W pattern, you can expect a crash all the way down. So that's a lot of pips. This may or may not happen, we don't know. Could actually decide to pull back up a little bit before coming down further. So you can't be so sure, because we're looking at larger time frames now, monthly, weekly. So all that may happen. But for now, this is how I'm looking at it. I just use the Fibonacci to try and draw from here, taking this as, just like in Euro USD, if we take this as a zigzag pattern, that's zigzag, A, B, C. The initial the projected level, the first one I saw would be around 0.60078. So meaning that's from where it is right now, that's about about 60 plus 30, so about 90 pips decline still expected. You can see that it's broke through the 1618 level. So we have with Fib, we have a projection level to around that level on Fib, while with using Electrowave target directly, the first target is actually around 0.595, which is somewhere around here. Let me see. Okay, somewhere around here. So if I draw from where it is right now, so the alert wave kind of target, that's about 150 pips decline expected. Okay. Now in all of this, in short term, you can use your stop using the previous high. You can just use that. The previous high using the decline way, you know. Okay, let me just show that. Using market structure. Came down, went up, came down. So just using this, you can just use this level as stop loss first. You get. Yeah. So why you expect further declines. So that's the way I'm looking at. Those are the three currencies I'm looking at for this week. If this video was helpful, please drop a like and subscribe to the channel and share it with others. I intend to help a lot of people this year. as we trade and try to make money for ourselves. Thanks for watching. See you in the next video. Bye.